Okay. Hi, welcome to the May 8th, 2024 Finance Committee. We are meeting hybrid, so we'll be taking public comment both in person and via Zoom. And highlights tonight are hearing from Scanlon and Associates of our, about the report and results of our independent audit for the city this year. So roll call, please, Laura.
Councilor Maori.
Here.
Councilor Bolton.
Here.
Councilor Elkins.
Here.
And Councilor Labarge.
Here. Okay, we have quorum, and I also want to just announce that if you are being audio and video recorded as usual. Thank you. Okay. Let's see if there's any. There's no one in the room. I don't see any. If you are remote and would like to speak, oh, I do see one virtual hand.
That guy.
Let's see. Oh, boy. Okay. Is that working?
Hello.
Hello. Hello.
Hi, Jeb.
Hello, counselors. Hello, everybody. Just stopping in tonight to hear Tom Scanlon's report. I'm looking forward to it. I've looked it over. I can see that we have an audit with no findings once again, and I'm excited to hear everything Mr. Scanlon has to say about the way we're doing a good job with our finances. So anyway, nice to see everybody.
Nice seeing you.
Thank you.
That's my comment.
Yes, and you are a resident of Northampton, correct?
Oh, yeah, I'm a resident of Northampton. I
Okay.
live on 18 Montague.
Okay, I think I
Thank
heard
you. I'm
about you
sorry for
before.
that.
That's okay. Any other hands for just public comment? I don't see any. Okay, so before we get to our audit report, we have some minutes from January 29th, 2024 to approve.
Move to approve.
Second.
Okay. Roll call, Laura?
Can we do?
Yeah, I guess we could.
We could.
Do you want to do a voice?
We could do
That's
it.
okay. We'll just do it. We'll do it aye. All ayes?
Aye.
Okay. Okay. So minutes approved. Moving on to the FY 2023 independent audit. Welcome, Tom Scanlon. Would you like to join us over here? Please do. Anywhere, yeah. Yes, and then you just turn that on until it's green. Excellent.
I think Mr. Nash is going to get a better forward for me talking.
Yeah. Yeah.
All right. How's everyone doing tonight?
You're doing well.
So this is the 2023 audit. Kind of just going to give you like a background, what is a financial audit, what we do, kind of go through. It's been a while since I've been here. But there's basically four main reasons for having an audit. If you issue bonds in the bond market, you got to have an audit. Oversight agencies, DOR, DESI, of course you'd have one. Single audit, which is if you spend over $750,000 in federal funds, which you do, so you're forced to have an audit. And then the fourth one is just general practice. Obviously, you fall into the first three. And what we do, it's a financial audit that we're doing. It's not a forensic audit, so I know there's always that expectation gap between client and exactly what we're doing. So it's a risk-based audit, so we're opining on your financial statements. That's our main goal. And the users of your financial statements are the bond rating agencies, the granting award agencies. They're the ones users of it. So as we go through, I'll kind of show you what we do, how we assess risk. And there's a crossover point that we do have to consider fraud when we're designing our audit procedures, but it's not our sole purpose. We're not looking at every single invoice. I know there's they're called management audits out there, which is more, we spent X amount, are we getting a return on it? That is not what we're doing. So, for instance, I'll take DPW, plowing of the roads. We spent, $2 million to plow our roads. Is it efficient to the money we spent? That's what we're doing. What we're doing is, on your financial statements, you have a budget for snow and ice. We look at it, is snow and ice expenditures going there, and we're assessing risk, and they're being signed off on. It's more your internal controls around the expenditure, not your budget. You're getting back what you're doing, like police. There's big studies out there now. It's more management audits, so we're financial. Just want to usually like to clear that up on the things. So as we go through, you should have got 4 reports. The main one is their financials. I was going to kind of walk you through that. We did issue an unmodified opinion, which is the best opinion you can get. So when your bond rating agency's out there, when you're meeting once a year for continuing disclosure, they're giving you the thumbs up. They want to see that, which is really good. So kudos to management on that. But as we walk through on your financials,
Is that on page 3?
page 3 and 4, correct. 3, 4, and 5. It gets longer and longer every year. It used to be like a 1-page, then a 2-page, now it's 3 pages. There's a lot of words in there that that gets to the opinion that it's unmodified. But what's unique about governments is you actually have 2 sets of financial statements as we look at you. And on pages 17 and 18,
And which report is it?
the financial report.
Okay, thank you.
Yeah. We gotta start with the big one. So on page 17, 18, this is your statement of net position. This financial statement is more for accountants, accountant euphoria. As you'll see, fixed assets on here, which recognize depreciation in financial statements. You're not budgeting depreciation. The usefulness of this is this captures all your long-term liabilities and kind of shows you over time where you stand. One thing to pull out of here is if you go to page 18, under unrestricted, under governmental activities, you'll see a negative 137 million.
Rachel, would you mind if I shared screen?
That'd be great.
Yeah.
I'm gonna ask Laura to do that. Thank you.
What page?
18.
I don't have that.
Yeah, you don't, well, there was another link that 88 page before.
Oh.
That's what that's part of.
I got up as far as 15.
I don't know if you can see that, but.
So if you see on page 18 here, you see under unrestricted, you'll see a negative 137 million. Usually you don't want your net position restricted as a negative. The 2 drivers of that 137, if you go up under non-current liabilities, the net OPEB liability at 130 million, which we've talked about for several years. Somewhere in there, it is a real number, but there's a lot of factors that go into it. There's a lot of assumptions, discount rates, medical trends. So you're not going to solve that liability overnight. But you have been tackling, you did adopt an OPEB trust fund, which I believe, balance and interest. Yeah, you have at June 30th, you have about 4.2 million in your OPEB trust. So you have plan design, so you're tackling it, you're assessing it. Again, OPEB, in my opinion, is very long-term thinking. Is, if you think of it, a position is generating an insurance cost. So if you take, like, police chief, there could be one active health insurance cost in there, but you can maybe have 4 retirees after that. So there'd be 5 positions causing that one. There'd be 5 health insurance costs causing that one position. So it's really long-term. And how to keeping your employees, it's a soft cost that you promise your employees at a given point in time. You're paying their health insurance for the rest of their life, 50% of it, and that's what they're measuring on your financial statements. So it's very long-term thinking, and at some point, as you're funding that trust, is then utilizing it to fund your budgets coming in future years. Like anyone that retires after 2035, we're going to start paying out of the trust, so it's going to help your budget down the road. But it's really, don't pay attention to the dollar amount, but it should be in the back of your mind when you're setting budgets and thinking, when you are hiring new personnel or people are leaving, you're replacing them, is there is an OPEB cost. And it should be in the back of your minds thinking, hey, yes, it's in our budget for $50,000 for actual pay, but there's this promise that we said if they work here for X amount of time, they retire here, we're going to pay their health insurance costs.
Can you tell me the page again, just so I can put it in, so it makes it into the Zoom recording?
Page 18?
Oh, no, the trust that you talked about.
Oh, the trust breakout in the notes on page 73. And I believe your funding is like 350,000, I believe you put into it. Again, I wouldn't, in funding your OPEB trust, I wouldn't take free cash and fund it, because you're taking an unrestricted reserve and putting it into a restricted reserve. I would more fund it like from, like the tax rate and putting money in there, more than taking it from a reserve. That's just my personal opinion. But again, you know, we had a town that took $3 million out of their free cash to fund their OPEB trust. I'm like, yeah, probably wouldn't have done it, 'cause you just took an unrestricted reserve you could use for roads and other projects, and now you put it into future funding. The only way to get it out is to pay health insurance costs. So that's what I mean by that statement. But again, I think you're addressing it. It's on your financial statements. And then the other liability on there is your net pension liability, which you're on a funding schedule, I think it's 2032, 34? 2035 to be funded. So we should see that liability drop off come 2035. So, like I said, these are more accountant financial statements, but these are the things to pull off here when you look at it. Net position being a negative.
Going back to 18 now?
I'm going page 20.
20,
Yeah,
okay.
moving on. So this is your more traditional financial statements. This is your balance sheet. It's probably the most useful. And when you look, you're unassigned under the general fund at 32 million, 32.6 million. First column, last number all the way down, unassigned. That should be your free cash number and your stabilization funds. For GAAP, stabilization is reported under general fund. 32.6 is very healthy. When we look at your budget is about 132 million, if I remember right. As a benchmark, as bond rating agencies and GOR look at you, anywhere that number between 10 and 15% of your budget is good. You're about 24%. So your financial policies are working over the years. If you go back through your financial statements, you didn't have that higher percentage. And it's always good to know, is like, your free cash is being certified and you're getting the number and you're voting from it. You want to see it reflective in your financial statements. So if you do, so your free cash was certified at 12.9 million. Your stabilization was 18.2 at June 30th. And then the DOR has, they take away your overlay account, which is about 2.5, and that will get you right back to the 32.6. So it's reflective in your financial statements. So as we assess risk on your financial statements, really the general fund is kind of a focal point for us. And you kind of break down your balance sheet to the top half. You got your largest assets are your cash investments. So we spend a lot of time, do you have a question?
Oh, I think Director Nardi had something to add?
So, I just wanted to mention, you said like our whoa, this is falling apart. Our reserves the past year, that includes the ARPA money that we took in as well.
Correct. That's part
So-
of your free cash of that 12 million, correct?
Right, so that's accounts for that.
Yes.
Much larger number is because
Yes.
of those federal funds that came in.
Yeah, that came in 22?
Yep.
Yeah. So that's what jumped you up there. But again, that's kind of a one-time flow into it. And then when you look at free cash and stabilization, they should be used for like one-time items. I'm not saying they can't be for reoccurring, but if you think about it, it's a one-time. Free cash is not reoccurring. So if you start spending more free cash than you're generating, you're creating a budget deficit. Again, if you start to do that, you're going to have a plan in 3 or 4 years or whatever. We have that kind of matching that point, that time when you start dipping down into it. And if you look at, there's some schools out there who've been reading in the paper about
Yeah.
ESSER monies. ESSER monies were one-time funding, and some school districts use that for payroll. Well, if that payroll is going to stay with you after the ESSER grant goes away, that's going to cause budget issues for you. And that's the same thing as free cash. It's kind of the same concept. I'm not saying you can't do it, but
Yeah, I'm gonna
it's not
add.
good policy.
Yeah, Tom, the reserve,
Yep.
can that be used to help, like, our school department? Because their deficit is so bad that they need money. Can we go to that reserve and
Cash?
help out with that?
Free cash, you mean? Yeah. You can vote free cash for any lawful purpose in school department.
Thank you.
Yeah. You just have to watch. Free cash is one time. I mean,
Yep.
when you get to the budget versus actual, so how you're generating it in your budgets. But, again, just a general recommendation. I know cities and towns, and I think it's my 33rd year doing this. Doesn't feel like 33 years, but I guess it has been. Is the common denominator with towns that have budget issues, are in trouble, is they're spending more than they're generating. Like, they're using free cash for recurring expenses, and they're not generating. So at some point, they're going to hit that crossover point. And that's okay if you have a plan. So as we look at your balance sheet, if we go to the top half and we look at your assets, your biggest assets are cash and investments. So what we do, we put a tremendous value and stress on, in the treasurer's office, looking at bank reconciliations, because I think that's the key to everything, and firm-wide, is if you're balancing your cash and you're balancing your cash timely, and all reconciling items are documented, like you just don't have this, DIT for $100,000 that sits there for 4 months on your bank statements, that they're clearing out, and it's all documented. The rest is kind of geography on your balance sheet when you're assessing risk as far as issuing an opinion on. So cash at the bank statement level, which is where the asset's being held, if that's being balanced to your financial statements, which is in a separate department with the city auditor, that's being reconciled on a timely basis and it's being documented, the risk for us kind of goes down. So we spend a lot of time in the cash recons and making sure that items are clearing out, there's no unusual items, and you're timely. You're reconciling by the end of the month, 45 days from the closing. So a lot of that risk is generated what we're doing for procedures. And then you'll see on your next largest asset is your receivables, which is your property taxes, your motor vehicle excise. Again, we're spending a lot of time in the collector's office that when a resident comes in and pays, they're logging into that subledger, into the collector's office, they're knowing that they paid, and they're generating outstanding lists. And when they bring that receipt in, it's being recorded in the general ledger, which is independent. If they're saying what is outstanding on a financial statement, it's matching the detail in the collector's office. Again, the risk goes down for us. If there's a variance, they may look at deeper into collections or try to identify where it is. Is it in the commitment? Is it in the abatements? The city as a whole does a good job of reconciling those two assets, cash and investments and receivables. And for us, as we look at those, put stress on it, really get into it, and you're reconciling. Again, you start reducing the risk of where the financials, where the errors could be. And if we flip over to page 21, this is your change. So we just talked about your balance sheet, and this is your revenues and expenditures. So again, if we look at revenues and assessing risk, your property taxes, if you're balancing your receivable and the revenues going to your general ledger and outstanding list balance, that's proving out your property tax revenue. So kind of two, balancing the receivable and balancing out the property tax revenue kind of goes hand in hand. You've got a variance at the receivable level, it's probably going to be reflective into the collections. And we do analytical, compare 1 year to next. So say, your tax rate jumps up $5 million. And we expect to see a turnaround of $5 million in collection if your collection rate remains the same. So let's say we don't see a jump up in collections of $5 million in property taxes. we'll look to see if your receivable grew by that internal amount. So if you only jumped 2 million, did the receivable grow 3 million? So kind of everything's kind of related. So we do substantial analytical when we look at this. And then on intergovernmental, which is your receipts from the state, we get a printout from the state that says what did they give you, and we trace it all in. So we're doing a 100% test on the state receipts. And the risk is we don't want to see a grant that has restrictions on it sitting in your general fund, which becomes part of free cash, which then you would vote it. So you just, free cash to be overstated, and you got a grant sitting there. So that's the risk on your financial statements, and the vice versa. We don't want to see a general fund money like lottery money coming in. We don't want to see that sitting in a special revenue fund, because it's a general fund revenue. So that's kind of the risk when we're looking at your financial statements. So as we do the top part, and again, like the hotel, motel, meals, and cannabis, again, that's coming from the state, it's flowing through information, we're tracing that in, that you did receive that money. So we're making sure it's going to the right place. And then you got license permits and fees at 12.2. We do analytical with that. That would be like building inspector receipts. We'll compare last year's to this year's of what you're budgeting to what you actually got in. If there's any kind of fluctuations, let's go out and look at the building inspector department. We haven't been out to the departments too much in the past 2 fiscal years. We felt there wasn't a need to, but I think next year we're going to start getting back into the departments. But analytically, the fine. And then on the expenditure side, same thing, kind of looking at budget versus actual, making sure what we do is we tie in the budget from the city council votes, get the bottom line, we make sure it's properly reflected on the tax recap sheet that's assessed out, and again, that's how people's tax bills are distributed out. So if you vote your budget and it gets put on the tax recapping incorrectly, that affects what people are paying. So again, you have good procedures in place from the time you vote to setting of the recap. There's a lot of people involved, as assessors, Charlene's office, city auditor's office. All goes into the tax recap sheet. And if there's an error on there, it's going to be reflected in the real estate bills. So we do a test on that to make sure what you're voting on goes into the recap. That's all reflected on here. And then when we look at your expenditures, we're looking at budget versus actual. Like the police has like a $2 million budget, and it's overdrawn. We're going to look at why was it overdrawn. We're going to go look into that deeper, make sure there's no deficit accounts. So that's more analytical. Same with payroll. We'll do analytical. We'll compare like salaries to this year, salaries to that year, see any trends. And then we'll pull a list of like maybe I think 40 names we pull to make sure they're getting the right pay. So it's more analytics and detailed testing. We're not pulling every single invoice if we look at on the things. And the difference in the categories here, like stormwater is a major fund. You consider that fund public. People are interested in that fund, so we made it a major fund. And then the ARPA grant, certain criteria that makes it. Obviously, the flow through the revenue to you, it's a major grant. And then the non-major governmental funds, that's grants, revolving funds, capital projects that you voted, trust funds. And there's a breakout of those on pages 85 through 88. I would probably encourage you to look at in your spare time. Because something might jump out at you. Looking in there, you might see a revolving fund or a capital project that might be an older capital project that you could utilize. But I will say, your city finance team does a good job at looking at obsolete accounts. Something may have adopted a revolving fund, say like several years ago, and the climate has changed for the revolving fund, and it's almost dormant, it's inactive. And you'll close it out and have a change of use for it. Same with capital projects. You're really looking at those unspent proceeds to see if you can use them. I always encourage go look at the non-major funds. Something may jump out, some have a question on it. But I don't know if anyone has questions on these two financial statements, where everything sits, what we do.
I mean, I do have questions, but if you were...
I got one more financial statement to go through, which is probably most important, which is on page 24. is like probably the most important. If you don't look at anything else, probably concentrate on this. This is your general fund budget versus actual. This is telling you where your free cash is coming from. And I generally, so the top half of the revenues, you see the original budget, that's the first budget you vote at the council meeting in June. And then the final budget is everything that, any amendments you do, any transfers you do. And then the fourth column over, that's your actual. And then at the column all the way out, that's how you fare towards your budget. And you can see on the revenue side, you generated 5.1 million in excess receipts compared to what you budget, how you set your tax rate. Approximately 1.2 of that is kind of a one-time settlement item that you kind of got to throw out when you kind of compare through your years. So call it $4 million roughly. And you've always very conservative on budgeting over the past fiscal years. You go back and look at 21, 22, and this 23, you're in that ballpark of $4 million pretty consistently. I would encourage to keep that type of budgeting going forward because it is generating your free cash. Now, if say like you did want to use free cash for something recurring like the fund budgets, it should tie to this number. So if you take half, like, I'm going to use 2 million of, we consistently got 4 million of our revenue numbers. You used half, knowing, okay, I'm going to generate 5. Over time, you're going to start losing $2 million of your reserve. So again, if you have, let's say you have 12 million in free cash, you keep on doing that, you got 6 years. I'm not that good at accounting.
We already paid.
So you got 6 years if you can think about that and considering. So that should be in your thinking how you budget. And I think it's very important as far as management of the city is knowing how your free cash and how it affects and how it impacts and kind of how it's impacting and where it's coming from. And then on the expenditure side, you have about 2.5 million. And when you look at your budget, it's roughly about 2%. Don't you turn it back, which I think is pretty good when you look at it. You're not over budgeting anywhere in particular. You have a nice rounded. Your highest one is employee benefits, which is $900, which is a very sensitive area because it can fluctuate between open enrollment and everything. So where you're budgeting, I think it's very proper in the turnbacks. And again, you've been pretty consistent on that between 2 and 3 million in turnbacks over the years. You go back. Kind of have to throw out 20. That's kind of the wild card year, but 21, 22, and 23, you've been pretty consistent. So in your current budget, you generate about 7.6 million in free cash, and your free cash was just 12.9. So I think you had unused free cash of 5.5 from the previous year. Again, I always think that's important to know too. So of the 12, 5.5 is really, I'll call it one time because that is probably you're rolling unspent, and that goes along with your policy, which your bond rating agencies are really looking at that when you meet once a year and go over that, making sure you're within your budget policy about free cash. You take half and send it to the stabilization.
We divide it into thirds.
Yeah.
We take a third and put it into capital projects. We take a third, put it in reserves, and we leave a third for any emergencies or needs throughout the year.
So if you were to get off of that policy, that would show reflective in your financial statements. And again, when you're doing your continuing disclosure, they usually use a 3-year look back. 1 year is okay, 2 years, 3 years starts to become a trend. If I say, are you abiding by your policy, maybe you should change that. So that's how all your financial statements are kind of all interrelated. And I think it's very important to know how your free cash is being generated and how to use it. And again, if you take, because I know you had a couple votes, if you take, say, 6 million from free cash and put it into stabilization, you're not changing your reserves. You're not changing the total general fund. So I know that. Sometimes it's confusing because I know those in one state say, well, our reserves should have went up. We took 6 million of free cash and put it in our stabilization. Well, it's the same thing. So to grow your reserves, you have to either be conservative on your receipts and have them grow. So if you're going to use, if you start increasing your local receipts to have an effect on your tax rate, like say to fund your budget, your free cash is going to start going down. So if you have this,
Can you say that again? Sorry.
if you increase your local receipts here, it will help fund your budget. Say you have, I don't know, $5 million budget.
Oh, you mean if you project out higher?
Well, say like in '25, you say, I'm going to fund, I have a budget shortfall of $5 million. I'm just going to increase my local receipts here. You're really using free cash to fund your budget.
Yeah, I get.
Director Nardi.
So yes, thank you. I just wanted, that's what I wanted to comment on. You spoke before. So we have been very conservative in our projections for revenue, but if we start pushing those revenues higher, our free cash is going to go down. And if we can't do both. Like if you start increasing the budget, you can't do both. You can't use free cash and push revenues as you see that they grow to use on your, towards your budget, because we're going to end up with no free cash.
Yes.
So I wanted to be careful when you say use, the philosophy has to be one or the other. If you start to do both, you're going to
Sorry.
have, and I just wanted to reiterate too, the idea of using free cash for a budget long-term is not the plan you have to have a plan to get off of that.
Yes.
So what I'm hearing, Chardine, you stating that it's not a good way to use that free cash.
Correct. As a finance director, I would never recommend supporting a budget on an ongoing basis with free cash.
And so, and you said, and you talked about in general, like if you use free cash, you have to have a plan. And would I be correct to say that a plan would be like we have a fiscal stability plan, so following that policy. But if that policy wasn't working, then in general it's planned override, a planned reduction, some planned reduction in our staff and our costs would be another version of plan.
Right.
Would it be fair to say that part of a plan would be an anticipated known new revenue source? Like if we are building we know a new company is coming in, a new factory is coming in.
New growth, yeah.
Like that, so new growth, but it's got to be known. We can't just be like, we think that
Correct.
pot money is going to be more next year. We have to
You kind of have to know, yeah.
Yeah.
It's kind of, and even on the marijuana money, that's so market sensitive. Same like motor vehicles, they're so market sensitive. Meals, hotel, motel, again, they're so market sensitive. You really don't want to. You want to use those type of revenues to generate free cash. And again, this is my personal opinion. Again, you've done. There was a point in time where you didn't do such a good job at that. I can't think how long ago that was, but I remember Mary was on the council. That wasn't sitting here saying good things. So, again, it's reflective in your financial statements. Again, it's your policies going forward, and you got, I understand budgets and everything, but understanding is one of the key to the games. We had a town several years ago before COVID out in the central part of the state. They sold a lot of tax foreclosures they had on, and they generated like $2 million a year for 3 years. And they took that $2 million and reduced the tax rate for 3 straight years. And we're telling them, like, at some point, you're creating a budget deficit of $2 million because you're not going to have that revenue. And then, sure, in year 5, they couldn't fund their budget and they were over their levy. And I remember the town administrator at the time saying, how did you know that? It's like, well, it's a very basic kind of, if you're using something to keep on going, you don't have like that revenue coming in, like, I guess if a casino came in, generating nuclear, you have it, but you gotta have something to come in if you're gonna do it.
No, right.
Other counselors, I have some questions, but.
Fine.
Yeah, I just, I think you issued this report for mainly for the council and for the mayor's office. So I'm not, I don't think it's particularly easy to understand some of these concepts. I'm just saying,
No.
I did some background and got some questions answered. So this sentence, I'm just to kind of manage expectations about what this audit does, you kind of addressed this in the beginning, but you say here, we considered the City of Northampton's internal accounting control over financial reporting, internal control, as a basis for designing our auditing procedures for the purpose of expressing our opinions on the basic financial statements, but not for the purpose of expressing an opinion on the effectiveness of the city's internal control. Accordingly, we do not express an opinion on the effectiveness of the city's internal control. Can you just speak to that? Because I find it a little difficult to understand.
Yes.
Thank you for validating.
That's accounting speak. We're not opining on your controls, like your balance in cash.
Oh,
We're not
okay.
giving an opinion on that control is working, because it's a point in time, like it could, I'm here in September, it's working, but the minute I leave, it could not work. So we're not giving an opinion on the effectiveness of your control, but we're going to opine on your financial statements. I know that's a fine line in between. Probably more CYA for auditors than it is. Did I answer that question? I just want to make sure.
Yes.
Yeah.
Well, and I actually have a follow-up to that question. So, I'm going to actually share the screen again, so I can go to, so there's a letter to those of us who
Oh,
are
yeah, that's, yeah.
the political types, and I think that is in there.
Yep.
Actually, let me go here. So there's the management letter.
Yep.
With that language, and that Rachel just spoke about.
Yep.
And I just wanted to go unpack it just a little bit more. So I think I understand that to mean when you say that there are kinds of audits that look at the controls and
Correct.
right? Is
Yes.
that more of like a forensic audit or?
Yes, it's more of a forensic audit.
Okay. And so this isn't that, but in order to figure out how to do the audit, first you have to figure out how the city works, how the
Correct.
machine parts roll.
Yep.
And in that process, you do sometimes, and probably pretty regularly, would uncover where there might be issues. You're just not looking for it, but you might uncover them.
Correct. So you read the auditing textbook.
I read your
You could be an
report.
auditor.
I read your report. And then,
Exactly.
so looking at it, so it looks to me that, not, the purpose isn't to necessarily to find these kinds of errors or mistakes, but you expect that if they are there, that you might find them.
Yes.
And that, and I'm reading this and I see that you kind of like rank the kinds of problems you might find.
Yes.
Sorry.
Yeah.
And so there are, from least to most serious, it seems like there's deficiencies.
Yep.
Significant deficiencies, and then material,
Yes. Yep.
just material weakness.
Material weakness, that's bad, yeah. You don't
So
want to see any of those.
Right, okay, and it's fair to say you didn't find any material weaknesses?
Nope.
In this? I wanted to point out, just for for anybody who might be watching, I was really struck by this in the report, which is, this is in a letter to council, in the letter to council.
Yep.
Actually, I named it letter to council.
It's
Those charged with governance.
Yeah, South 114, yep.
Right, so I was struck by this, that management has asked us to provide all adjustments and identified regardless of materiality. So so do cities have the option of just saying, like, don't tell us we don't want to worry about the little things, so like as an auditor, I assume if you find deficiencies, particularly material weaknesses, you got it, that's in the audit.
That's in the audit.
Right.
Yeah.
But do cities have can they just be like, we don't bother us with the little things? If they're not a material weakness, if they're not significant, we don't.
Correct. They can say, yeah, we don't want to make that.
Does it cost more money to kind of write that up and follow those leads? Okay.
No, it's just here, it's, if you're in there testing like departmental receivable for I don't know, for DPW, and you find a transposition error for $96, we want you to give it to us because we want to book it.
Yeah, you want to.
Yeah, and most of my clients are like that, which I'm kind of happy about. But what that sentence is dealing with, so when we design our audit procedures, we assess materiality on your financial statements, say, okay, materiality is set at 560,000, let's say. So unless we find, if we do a test, we pull our statistics sample, we test, if we find something wrong with that sample, we project it to an adjustment. And if it's material, then we have to make it, and then it goes into, okay, then we have to assess it as a material weakness, as a significant deficiency, and we make it, and then we have to adjust your financial statement. So the minute we adjust your financial statements for, say, like $10,000, which is the case in some of these adjustments, it could reduce our materiality. That's why that sentence is in there. So if it says materiality at 560 and we're giving you an adjustment for 10,000, we just reduced our materiality down $10,000.
Is that what you mean when you said it was an unmodified report?
Yes.
Okay, so that didn't happen here.
Material adjustments, yeah. It was like cleanup stuff, like
Right.
I'm saying the CDBG grant receivable.
Right, so I just was gonna touch on that. So you didn't identify any deficiencies, much less any material weaknesses, fair to say?
Yeah, so I'll kind of explain. So we assess risk, we find out, we gain understanding of the client, according to auditing standards. And part of that is the assertion is, there's cash and investments on your balance sheet, and we're opining on that, that they're correct. And there's assertion that they're complete, the cutoff is proper. So we would go in and say, do you balance your cash? And the control is, yep, we balance it every month. And here's the documentation. We have the city auditor sign off and the treasurer sign off. Okay, so we'll go look at that. Yep. Okay, yep, balance is okay. We're going to do a walkthrough. We're going to go look at the bank rec for that June 3rd for all of them. And if we go in there and your bank reconciliation is off $1 million, nothing's documented. Like your bank statement says $3 million, but the reconciled balance is 1.9. There's nothing documented to get down to that amount. We go look at materiality. Okay, that adjustment is above 560. That's a material weakness because your financial statements could be off $1 million because that's not documented. And then we'd go further and like, oh yeah, we really don't balance. We just fill this out and we sign it. Like it's not, it doesn't represent anything as our testing comes out. Then we say, okay, is there anything missing? We got to dive deeper into our adjustments. You know what? We got to go look at a whole month roll forward. We're going to look at every single deposit in the month of March and see how it's getting reported by departments, how it's going in. Is the process, is there no control over the receipts? And you find out there's no sign-offs or no one's, when the money goes into the bank, the department's not signing off. Now you have two control deficiencies there, not reconciling the banks, and then you have no control over your deposits. Both of those, in my opinion, just by the numbers I'm talking about, would be material weaknesses, and you would see it in here. And it would be reflective all over your financial statements. Because you could potentially have a $1 million mistake in your financial statement. And then you have to say, well, does that affect the opinion now? Can we give an opinion? Again, if we found that, we wouldn't leave it off $1 million. We'd do a lot more testing and drill down more and more. And then, like, if you were, let's say, it's the same kind of deficiency, but you're only offered the bank, like, a minimal amount, but you're doing something every month, but, things are going on, like, like, I've been meaning to get back to that. We leave this rolling balance, but, we're going to come back to it once a year. But you can't get to it, and it's like 50,000. That would probably be a significant deficiency. You're really, I'd go back and forth between that. Because I put a lot of importance on your bank recs. And then, like, another matter, you might have, like, a $45, you might have some old reconciling items, like, you wrote checks from 2010 to 2016, they're still in the outstanding checklist. Well, it's like, oh, take those in tailings, and that would be like in other matters, what you have in your management report.
No, go ahead. So and just to be clear, if anybody tuned in a minute, you're not saying any of that kind of thing happened here.
I'll just give an example.
Yeah, and I just, just to kind of wrap up the thing that I was thinking. So there are, because management here in the city asks that you you bring everything, even the little things, even
Yep.
things that weren't those. So there's a couple of things that you brought to the attention of management,
Yeah.
and there's city's responses.
Yeah, and they were in the community development was one of them. It was just a matter of a different report and looking, it was more of getting the right report and doing it and being reflective. It wasn't a major deal.
And I have one more question, I'll stop, I promise.
Yeah.
And then just, I see that we have kind of, it looks like kind of an ongoing thing of going back and collecting old uncollected
Yes.
property and excise tax
Yes.
things. So if that stuff comes in, that's one-time money though, at this point, right?
Yeah, so motor vehicle kind of has a built-in uncollectible rate. Someone comes into town, registers the vehicle, then moves out and goes to Idaho. You're probably never going to get that, 'cause it's never going to come back into the state. But you are marking at the registry. But the registry, I think now is down to 6 years, if I remember right. So after 6 years, they don't come back. I think they remove the marking, but you are marked. The personal property, I know you're tackling that every year, trying to go back and get that older personal
Yeah.
property. You've got quite a few years outstanding in that. But on the real estate, where you can lien and enforce it, you're right up on your liens, and you're right active in doing that. Just those, I call them built-in problems with personal property and motor vehicles, kind of has a built-in uncollectible rate. But again, it's not like a business. It's not like you recognize that revenue. It's offset by deferred revenue in the state of Mass. So every dollar you get off that would flow right into free cash. So.
Go ahead.
Can I follow up on that line of questioning? There are outstanding property tax receivables going back to the 1990s. And you say in the report that the collector's office is now targeting cleaning up 10 years. The 10 furthest back years or the 10 most recent years?
I think they were going to start, I think it was the more recent ones and going back 10 years.
The more recent ones, which would seem to be the ones that would be more likely to be collectible. And is that, I guess this is probably a question for Director Nardi, is that being done with additional staff, or how is that being accomplished?
So it's being done by the treasurer collector?
Yes.
And she's committed to cleaning up exactly that 10 years worth each year to try to get that cleaned up. As mentioned in there, it was prior to her tenure.
Yes.
So she has committed to this next year cleaning up the 10 years of personal property and 5 years of motor vehicle this year, and then we're going to continue to do it, but it's being done by her.
Right, and
Current
she
staff.
feels able to do that with existing staff
Yes,
then? Okay. Okay.
that's certainly our target.
Okay. Well, that is, that's hopeful.
Yes. Thank you. This is for Chardine. We're talking about taxes. If I can recall, I think it was right before the pandemic, there was a listing in the paper, a tremendous amount of people of back taxes. So is that included also of the collection of getting this money that's owed to the city? And I think that the treasurer's office handles that also. That list was huge in the Gazette.
So yes. Well, no, this is personal property and motor vehicle. There are we do every year put in the paper, or when they issue the tax liens, there is a notice that goes out on that, but the collector is up to date on all of those, and we work through the process. When folks have not paid their taxes, then we work through the process of actually collecting those.
And that includes the real estate taxes, correct?
That is what I'm talking about, yes. But this was personal property and motor vehicles, my understanding, were these.
I think we also had problems with the boats, too.
And those are all cleaned up.
They're all cleaned up now? Okay. That's good to hear. Yeah.
Yeah, in your tax title's not, your tax title standing at June 30th, 2023 was 418,000.
Yeah.
That's pretty good for a city your size and what you
Yeah.
commit.
So we're on top of those.
Yeah, you wouldn't want to see that number like 12, 15 million.
Right. No, you will not see that number at 1250.
Charlene, I will not have it.
Exactly.
I know a few towns that have that kind of number.
So Tom, just to clarify, were you done?
I'm out there.
Okay, clarify, so when you say, however, during our audit, we became aware of several matters that are opportunities for strengthening internal controls and operating efficiency, you're just talking about these comments and response recommendations?
Correct,
Okay.
yeah, exactly.
That encapsulates them all?
That encapsulates them all, but if you had a
Excellent.
material weakness, you would see it in here like bold and circled and.
Okay,
Neon sign.
Yeah, you would, yeah, it would be identified, and I would probably be in here a lot sooner. You know, I'd probably, if you had that type of issue, you'd probably request me right after my field work to say, hey, this is what's going on, you know? So, yeah, I mean, your financial concepts are working over the past decade. It's really reflective on your financial statements, and I believe that same concept as with your bond rating meetings, right? And, yeah, I mean, so it's an outside agency looking at you, rating you. They have the same feeling and same, you know, telling you. And then DOR, you know, you're getting your free cash certified in the fall time. I mean, the reporting with them is everything flows nice with them. I mean, not having issues with there. It's not like you're submitting in there, they're going back 18 times with issues. Again, that's another outside party looking at your financial statements.
this might be for either of you. So for debt service or debt exclusion, I mean, that doesn't necessarily negatively impact a bond rating, I suppose, as long as you pay it regularly, correct? Or
Well,
does it kind
so
of?
with a debt exclusion, that increases your ability to tax, so it helps you. So, I mean, if you.
Oh, how does that affect the bond rating? It does, you're saying it
It helps you.
It helps,
So,
okay.
I mean,
Yeah.
and I hate saying this, but it's true. Your number one asset as a government is your ability to tax. You know, you can, it is.
We thought it was our charming good looks.
That too. That too.
That's number two.
So if you're increasing your ability to tax, that's a good thing in their eyes.
Even if it's, well, debt exclusion would be for a specific project. Wouldn't that be too, that's just because it's limited doesn't mean that.
But it's definitely increasing your ability to tax.
That's true.
So if you're up
Yeah.
against your levy limit and you have no more levy capacity, because that's the other thing bond rating agencies look at too, is your budget flexibility, which is levy capacity. So if you want to go above that, I mean, it's a good thing in their eyes.
But you have to pay it.
So, yeah, if you have a debt exclusion and you don't pay it,
Right.
you know, you can't, you have to reduce next year.
Okay.
But did I answer all the questions on that communication letter? Just want to make sure you're okay with that.
Yes. That's it.
Okay. Yeah.
I do have one other, and I'm sorry, you've given me too much power, the share screen, just because.
If we start seeing photos of your pets, then I might cut you
Wow,
off.
they're.
Actually, I won't cut
really-
you off.
Have you seen them?
I know, they're adorable.
Right, so just more of us so that it's on the Zoom.
Too cute. Too.
I was struck by, and I believe that Charlene talked about this maybe in her quarterly report, but I was struck by, and I found it, and now it's gone again, which is a really lovely, oh, here it is, a really lovely return on investment income of $1.125 million. And is that, Charlene, is that the money that you were talking about, the interest that we got the good rate on? That
So that's recent. This is FY 2023. So
Okay.
He has not seen FY 2024, but we had, what page are you on?
12 of the financial statements report.
Yeah, just hitting the highlights of the. Yeah, and we've been seeing that across 2023 was a good year amongst all municipalities with investments. Just saw it
Yep. So,
explode.
yeah.
Okay, although that still is, it's the same questions that I have, which is that, and that's a product because interest rates are higher,
Yeah,
as a general matter, right?
Absolutely, yeah.
And this number, is that what was earned on our all of our reserve and stability funds, like all of our assets across the board? Is that,
No. So your investment income, the older I get, it's harder to see. If you go to page 21, this is just your governmental funds. It's 1.4 million. We just have investment, that's across, so your general fund is your stabilization and your reserves. And then you have your stormwater fund that made 17, and then your non-major funds, which are your trust funds, anything that gets to retain its own interest, like Arts Council grant. So across the governmental, it's 1.4. Your enterprise, entity-wide. So yeah, this is just for governmental, which probably is the more important number for you.
okay. I mean, but it's fair to say that if we were spending down our reserves, that
Oh, no,
interest
go down,
number
yeah.
is gonna go down.
Yeah, 'cause
It's a product of.
Yeah, because one thing that would, like I said, across our clients, we've seen a jump in that investment income. And I know we encouraged to try to keep that when you're setting your subsequent year's fiscal, on page 3 on local receipts. Don't try to go up to that number. Try to keep it at what you set it for 23 as the budget, which I think in 24 you did,
Makes
right? And I'll encourage in 25 to do the same thing because, I mean, that is gonna drop. I mean, just look at last year's or this year's, I mean, it's a huge increase.
So the story there is we're not going to count on that repeating every year. We can't include that in revenue, increase those lines, because we don't expect, at some point, that's not going to happen.
Right, and even a better than average interest rate, if the number
Right.
earning interest on gets smaller, then it,
Right, and then, exactly.
Right.
Yep, if you remove the reserves, they can't earn the interest or the investments, right?
So I want to come back to one point that Tom, you made earlier, that the total unassigned money as of June 30th was 32.6 million.
Yep.
And Director Nardi, you pointed out that that included ARPA money. About how much ARPA in that?
10 million, right?
So we took 10 million in FY 2022. That
Yep.
was the maximum amount that communities could take in lost revenue, and we did.
Okay, so that's a one-time influx into that unrestricted,
Correct.
unassigned, correct? Okay, so minus the 10 million, that would bring that unassigned figure down to 22.6 million roughly. And Tom, you said that the bond rating agencies like to see between 10 and 15%
Yeah, that's kind of
of the overall budget. So that 22 million then would fall into that 10 to 15% rather than the 24% that you calculated. And I think it's important to note for the record that if you don't count that one-time ARPA infusion, that the unassigned money that was available on June 30th falls into what the bond rating agencies say would be a good landing zone for a city like Northampton. Is that correct?
I would agree.
I would agree.
What's the range on that? Is there like a sense of a plus or minus? Or is that kind of?
No, I mean, I don't think the reserve police going to come last year. Just general overall rating.
Got it. Were you done, Stan? Did you?
Yes, thank
Okay.
you.
I just had a question about a closed system like an enterprise fund. And this is probably not so much reflected in 23, but, we're losing Coca-Cola. So when you audit, you're looking at, the closed system in terms of, because we're, basically we're having to pivot and raise fees to keep that closed system working. And I suppose you've looked at that. I think it will be, probably more evident next year. But that's something you look at in this type of audit, right?
Yeah, so what we do is we look, the enterprise funds, we do several works. So again, we do kind of the same things in the general fund. We look at a budget you adopted, make sure it's reflective of the financial statements, compare it to what you're estimating for revenues, and the revenues come in. Do a lot of analytical, tie out the receivable. Again, you know, if you send out this much in commitments, it's reflective in the subledgers and the collections that come in, and the outstanding list matches the general ledger. So we're looking, it's kind of like a mini general fund, doing that same concept. So if we see revenues dip, we would say, geez, why'd they dip? And we go and look, and then you know, try to get back to attribute it to Coca-Cola, because it could be something else in there. So we do. So it's the exact same concept. We kind of walk through with the general fund. We're doing in those water and sewer funds. The reason I didn't walk through the financial statements with you, because they are not reflective of what you put up, because you got depreciation in there, because they're accrual-based for enterprise funds on a GAAP. So I tend not to talk about, but we do the same concepts in there.
Yes, Director Nardi.
So one of the other things I wanted to mention was, and Tom spoke about this, when we talk about DOR overlooking the city budget, when we set the recap, they are also looking at the amount that we put in for revenue, and if they feel it's too high or too low, or if they see something that's out of their range of norm, we get those questions, you know, the city gets those questions. So being in other roles, in other communities, we have gotten those where DOR will be like, we're kind of looking at this. Why are you, you know, is that okay? So, you know, I've heard a lot of people say there's no oversight, we're underestimating, we're not doing things properly. And like Tom said, there is thresholds that DOR looks at and then questions if they have, you know, concerns about that. And you have to justify it. So that's that other piece that he was talking about overseeing as well.
Director Nardi, is that like rolling constantly?
So we set the budget we set the tax rate every year in
So whenever
the
you-
fall. So, and all of that's got to be entered into,
Okay.
you know, the gateway system, because we have to present a budget, balanced budget. Revenues have to equal the expenses.
But they're not doing this to you all year long?
No, just as we said it.
So
In
once
terms
of-
a year exercise.
Right, that's enough. But then I'm reporting to you budget to actuals all year long,
Right.
so.
But it's that critical point that they.
Yes,
that
that
they
when
will
we're
chime in.
setting the.
They always chime in? Like they
Well,
said?
no, I'm just saying if they, no, they don't always chime in.
Right.
In fact, you don't want them to chime in. So my thing is when I don't hear from them, it's a good thing. But I just wanted to say there's that other piece where, you know, if there's a concern that we're underrepresenting or, you know, there's thresholds that they look at for all communities, not just, I'm not pointing out just the city of Northampton. It's the process that every municipality goes through.
I would say if you want, I think you budget like 175 for investment income, roughly. If you suddenly increase that to $1 million, DOR will, you're going to have pretty good substantiation. They'll probably ask you, probably for an analysis of the banks all the way up until you set the tax rate to see if you're within reason of that. So something that's market sensitive like that, if you increase it, motor vehicle excise, if you increase it $1 million, they're gonna want more backup, because they don't want you to overestimate and get in trouble either. Like I said, you can use those type of methods for 1 or 2 years to have it be built into your budget over a course of time. You're going to have budget issues, no doubt about it. But you know, you could have that concept for 3-4 years. Knowing I have a plan to come out of it, like, hey, you know what, we're going to cut this back, or we have something falling off in our budget that we're not going to replace it with. You know, I know a couple towns they went right up. They knew what they were doing. They used reoccurring to cut it, but they knew certain things were falling off in budgets 6-7 years from now, and they kept to that. It was hard to keep to that concept. Because people wanted to use that when it fell off of those items, they wanted to replace them. It's like, well, no, we had this concept, that's what we're going to do. So sometimes it's tough to stick to that plan when you have it. But you got, if you're going to start using that, you got to have a plan. Again, my personal opinion. But
This is actually maybe more of a question for Director Nardi, but since we're talking about the DOR, again, There's been a topic of discussion on the interwebs. Is this DOR, Division of Local Services, and it looks to me to be stabilization fund balances, and it breaks down by every year. It breaks down every city, and so you can go back a certain number of years. And I just want to make sure I'm reading this right. Like, so it looks it looks to me like it's the, that there's been a change in reporting, but going back a certain number of ways, we had, it shows the stabilization fund balance relative to our operating budget. And in 2023, does that reflect a change in reporting?
Yes.
Okay. And so this $6 million, the $6.1 million, is that basically our free cash?
No.
Okay.
So that's just, so we have 9 stabilization funds. 8 of them are special purpose stabilization funds. The one that's not is the one you're looking at, that 6.1 as of June 30th, 2023. It's a lower number now. That's our general stabilization. All the other ones,
That includes your enterprise funds, though.
yes, that's what I'm saying. We have 9, so 4 of them are our enterprise. And the other 5 are the climate action, or climate mitigation, our opioid, the fiscal stability, and I know there's one more that's special, and I can't.
Actually, I have a breakdown on page 63 of the report.
Do you? Okay, perfect. So yes, there was a change, and that's why that 27 million was moved out. DOR said that we needed to report those as special revenue. So, but it's all of our stabilization, including the 4 enterprise funds.
Okay, so this 30% number for the,
Right.
oh,
Capital, thank you. That was the other one I couldn't think of.
so this 30% number includes the enterprise fund, so it's not exactly,
Right.
it doesn't fit in with that 22, 24.
I was just going to tell you, that's
Yeah.
kind of distorted a little. But
Okay.
that's the way they want you to report that table.
Right.
Okay.
Yeah, because you used to have those reserves in your water and sewer funds, and then remember what year that was? No, you weren't here. And they said it'd be a better idea if you voted those into a stabilization fund to retain its own interest, and that's what you did. So you took water and sewer monies and put them into stabilization landfill too, stormwater. So they're all reflective in special purpose stabilization, but they shouldn't be counted towards your general fund budget.
Well, that's not fair.
Yeah, but it came from water and sewer rates and stormwater rates.
Right. So yes, that percentage is inflated,
Yeah,
and it's not accurate.
but I do like that.
Or it is accurate, it's just not.
Excuse me, it's accurate,
Well,
right,
right.
exactly.
I do like that report from DOR. I'm glad they did that.
Yeah,
I like that, yeah.
that's handy.
Okay, anyone else have any more?
No.
So Tom, if counselors have questions, I should check.
You can email me, you can call me, that's not a problem.
I'm not seeing, oh, thank you.
I think I need to play the role of President Jarrett here.
Oh, yeah. Well, I actually didn't turn it on because I took one of Counselor Labarge's mints and I'm making a crazy crunching noise. All right, so if counselors have any follow-up questions, they
Yeah.
okay.
I'm really sorry, I've got one more. If I wanted to be an auditor when I grew up,
Yeah.
what would I do? What's your experience in education?
I went to school at UMass, 4 years.
Yeah.
Graduated, 1992, I think. Seems like yesterday, but, and then I went right to work for my father who had a company, and I specialize in municipal audits. We don't do any, we really just municipal auditing firm.
And are there any like certifications and things like
We have
that?
to get 80 hours every 2 years of training.
Okay,
And you have to be a CPA, obviously, they issue an opinion, so.
okay. Is there any like regulatory, like if you mess it all up and lead a city, do an audit and then they collapse into bankruptcy because you missed something? Is there any oversight?
But DOR, and then I'm peer reviewed every 3 years.
Okay.
I don't know about the chair. So, yeah, there's oversight, DOR. the peer review program, the
Right.
Mass Society of CPA.
Is there like ongoing education in terms of like training and?
Yeah, we have to get 80 hours every 2 years, so constantly, with all the changes, you kind of have to be, once a month, all the CPA firms that do audits and BOR get together for a meeting, first Friday of every month. We get together for an hour and a half and talk and problems, anything coming down the pipe. And every yearly Mass Society meeting we go to.
I bet that's a banger.
Yeah, it's a
Okay, we got to move on because,
I don't want to be an auditor.
so Nam has to leave at 8, so let's try to, if we want it to be recorded, we should probably wrap up. But Tom, thank you very much for all
problem.
the great
Thank
work.
you, Tom.
Yeah, if you have any
And,
questions, don't hesitate to reach out.
Thank you. Excellent. Okay.
I think I got everything.
Just take a brief recess here.
Yeah, sure.
The Bruins are on tonight.
5?
so-
Oh, gotta get home.
Yeah, yeah.
5 minutes, Dan? Well,
Brief, really brief.
We're taking a brief, I'm going to say 5-minute recess. Just Okay, we're back with the Finance Committee. We're on to our last agenda item, which is the discussion of the format and structure of the FY 2025 budget hearing. So for those who weren't on our Finance Committee last term, the way we've generally done it, and then I'm open to, this is why I want to have this discussion, is that we have the department head present, and then we take questions and comments from counselors, and then we take public comment. And then we usually allow 1 or 2 rounds of questions. And we limit public comment to 3 minutes. And all counselors are, in that time the time when we are discussing, all counselors can participate. So it's not just the Finance Committee with questions and comments. And we do this each department. So we have a public comment period after each department, so we don't have a big public comment at the very end. And what we do, what Counselor Moulton has done is kind of track questions, because what we don't want is the public asking questions directly to the department heads. It's really the job of the Finance Committee to kind of facilitate that, and to keep, and especially to kind of be concise by having, that's what Councilor Moulton does, he tracks trends, and so that we're not repeating questions. So that's how we've done it. We haven't limited overall public hearing. I did send that question to Solicitor Seawald about limiting overall comment, but that hasn't been something we've done. My assumption, my understanding is that with public hearings, that's not something you necessarily do like we do with, a council meeting. But we can and have limited individual comments to a certain amount. We usually have limited it to 3. So I guess I would like to hear from you all about that structure, how you think that would work, and any other comments you have about it.
So you limited, so one person, if we had 5 departments on, and I'm not saying we would, but 5 departments on in one night, they could pop up and talk 3 times, essentially?
Yes, they could.
Okay.
They could, that's true, yeah. And so we can allow a round of, 1 round of questions. I mean, this is why I wanted to just clarify with Solicitor Seawald, we could do it by time, like we have time for this many more. But I just want to clarify that part. But you did see that were confirmed for DHA, the Department of Health and Human Services. So that first night, they would go first. And then we'd have public comment and questions. And then after, we'd have the schools.
And we wouldn't have a general period of public comment. It would just be.
No, we haven't. We have it. It doesn't mean, of course, the public can speak, it should be relevant. It's a public hearing, so it should be relevant to the budget. But they can make general budget questions at any point, because it is a general public hearing on the budget. But we haven't had a public comment period just in the beginning. But I'm open to, your thoughts on that.
I thought it was great the way we ran it last time.
I mean, is there any prohibition, like constitutional prohibition, to just putting time frames on it? I just asked just because if, for instance, we wanted to sort of keep overall public, input, overall to if the 90 minutes is useful, because that's the rule.
Right.
And divide it up by the number of departments that we have. I mean,
I see what you're saying.
but I don't want, if it's not appropriate to do in the context of a hearing as opposed to public comment.
Right.
That's the question.
That's the question, and I don't think I've gotten the answer back from Solicitor Seawald, about limiting overall public comment or dividing that up. We certainly can decide on the amount for individual comments, and we can decide how many rounds of questions. I like to allow questions, and I like to, even though it's a public hearing for the public, I do like to let counselors speak first and ask questions, because often they'll ask, they're asking questions for their constituents, so we can cover some ground. But we could do public comment before the counselors speak or before questions. But I do kind of feel that I want the department heads to present first, because then you're eliminating potential questions that are being answered by the presentation. So that's where I would like to go. But the other part, I'm flexible if you want to.
Yeah.
I'm flexible. It's up to us all
I kind of question whether or not just general comments on the budget generally is appropriate after each department speaks. I just because we want to hear the questions specific to that department. I want to anyway. I don't, but I wasn't, I watched, in the past, and it's a different way of thinking about it, so
that tends to be what people did, but I guess I'm saying we because it is a public hearing, though, that I actually asked that question. And because it's a public hearing, we can't actually limit, to, because it's a public hearing tasked with the general budget, it doesn't, even though we have, certain departments presenting at certain times, we can't limit the public comment to that. Although I would say that most people followed that. If we said, we're presenting on, the schools, and we want to take comments about that at this time. Mm-hmm. It tended to work that way, but it's my understanding that we can't say, no, you can't talk about, police because it's the school's night or whatever. So.
And I can appreciate that. I guess I'm wondering, would it make sense to set aside some period of time for general budget comment or questions, so that we could, because if only 5 people are going to have a specific question for the Department of, for the Department of Health and Human Services, is it a good use of our time to have round after round after round? And maybe other people who want to just speak to that specific item in the budget, not have a chance to talk. I want people to have both. I want both general and, but I don't want to miss out on this, if people come to ask questions about a specific department. Because I know we're going to have lots of questions about school, and I do know we're going to have lots of questions in general about the general budget. So I don't know what other people think.
Well, how do you imagine that would be structured then?
About the I might, of the 2 nights, maybe we conclude with a period for questions about the general budget, or start, but with a time, at a time on the first night. I don't know. I'm just thinking through. If we conclude the second night, which we have 6 departments presenting, Probably not that.
that would be after, that would be after potentially an exhaustive period of time, and people may not be so enthusiastic at the end of that. So I understand what you're saying, that there are some people who may want to address the budget process, the budget as a whole. Where does it make sense to have those comments come? And
kind of what I'm thinking, but
yeah, no,
so, but trying to do it at the end, I don't think makes sense.
I would agree with that. I guess my other point is that while we have that department head there that time, that's the other reason why I wonder if we shouldn't try to, for their presentations, have it, so that we're answering questions about their specific budget, and especially because, we may be looking at, department heads justifying their budgets entirely, right?
Right.
So I wouldn't want that time for them to be asked directly about their work and their department's, needs and priorities, to kind of be subsumed into the larger budget discussion. In every instance,
Right.
They ought to get, everybody, each department head ought to get their time.
Go ahead.
I also feel that the way we did it and operated it very well, by having the departments come in They come forth, present their budget to us, we listen to what they say, and then we ask them the questions.
Yeah, right.
And I just think it went very smoothly for them also.
Right, because, well, one concern is frankly, like, if, say, we had public comment period in the beginning on the schools night, that the Department of Health and Human Services could wait for hours to present.
Yeah.
And, I mean, I hear what you're saying, and, but the comments, I mean, we can't restrict, if it's about, we can certainly restrict people to talking about the budget.
That's right.
But we can't, beyond that, we can't specify anymore. Certainly I can make a statement, and I actually plan to make a statement, just reminding people that the budget, that the budget hearings are really fact-finding mission. It's really about questions. I mean, it's certainly, it does happen, we, as counselors, do kind of discuss and deliberate, but really, that will be happening after the hearings at our council meeting. So it's really about, we're really there to ask questions of department heads, and not really to come, at least, deeply deliberate.
Right.
And so that's the purpose of the hearings.
Right, so we can't, like, the answer from Seawald is that we can't keep the questions to the department heads, or that?
We can limit the questions to the budget, but we can't say, okay, we're just talking about health and human services right now, because because it's billed as a public hearing on the budget, not a public hearing. It's not like 7 different public hearings.
Right. It's for each department to come in and talk about.
No, I mean, I understand that. I guess I just don't understand within the course of the 2 nights of evenings, why we can't.
Because it's a continuation.
Exactly.
I think we would have.
But if we give also time for general, for general budget questions? I don't,
I see what you're
I
saying.
want the time that we have the directors here to be able to speak to the questions that we have for their particular budget. I don't mean overall, it's the course of 2, just the.
Yeah, no, I hear you.
2 nights, so it's all one hearing. It's just how we manage the
No, we've never
time.
done that.
Yeah, well, that was my understanding, but that.
I like it.
Well, I don't think there's any reason why we couldn't start with a set period of time. And I think we could then restrict that aggregate period of time at the beginning. If people have general questions, comments,
Yeah.
that they want to make, we'll take that for up to an hour.
Well, this is what I need clarification on.
Yeah.
Because it's a hearing and not a meeting.
Yeah.
Correct.
So that's.
That's what I'm waiting to.
Is that what's?
That's the issue.
What you're suggesting?
I mean, that would be my suggestion. I mean, but in terms of
I get
it's a
that.
hearing, it's like, it's not a hearing like a poll hearing, right? Where it's like,
Right.
who's against and who's for. It is, so there's room both for the big picture questions.
Yeah, I get it. I
And
just don't,
then-
we cannot limit the small, we can't tell them at any point, we already had the general comment period, so now you can't make a general comment in the middle of the school's comment.
I just mean prioritizing when we have that department head there, that's the questions that we're going to prioritize in that section of the meeting.
The questions.
Yeah.
Yeah, questions, questions we can, that's Counselor Moulton, that's what he does, is he kind of organizes the questions appropriately. But comments, as long as they're about the budget, can be made if we open.
I mean, can we
Yeah.
at least put in place that we first, if people want to speak, that we first identify who wants to speak to that department's budget?
Don't.
and issues to make sure that, I mean, because if folks are going to just kind of throughout the night use their
Right.
number
Yeah, I
of
hear
times
you.
to speak, I mean, I just don't want, if people have come and waited to speak to us about the fire department,
Yeah.
I don't, are we going to have to wait through a whole bunch of general, I mean, I feel like it's fair to just make sure if anybody wants to speak to this department's budget, that we at least hear from them first before we go back to general comments.
Yeah, I don't know, yeah, this is, so perhaps I need to run that one by Seawall, just because with hearings, I don't know that, we can, that we can do it that way.
Right, I have never seen it done.
But I hear what you're saying.
I don't know if we've seen
Yeah.
what I
Well,
think
we've seen
we anticipated.
Right, I know what you're saying,
Coming out, too.
but I'm just,
Never seen, when we've had department heads here, of them asking them questions.
well, no,
No.
that's not going to happen, yeah.
They're not, no, right, they're not going to, we're not going to allow that.
But, if we could do, and that's that was the question I had for the solicitors, can we have a limited time and then have the kind of comment question thing, which will hone in on that. So I guess I need to get back to the committee on that answer.
Yeah, I mean, because I'd also just, what prerogative do we have to say, meeting's going to last this long, this is the amount of time we have for it.
Hearings have their own,
I know they can. Because my question is what do we have, what ability do we have to
right, and yeah,
to organize ourselves?
got it, yeah. So those are some ideas, and I will check with, because, he's going to get back to me anyway, so I'll run those scenarios by him. How about I do that?
That sounds
Yeah. Yeah. Any other, and with rounds of questions, this is an unusual year, and I want to name that, we haven't, before, we allowed maybe, I think we did 2 rounds each.
Trying to think.
One question, one follow-up. We did make stipulations around
From the
questions.
public you're
Yeah,
talking
yeah,
about.
yeah. Questions, which is, done differently. So,
And is that subject to the same limit as in one person can comment X, or ask questions X number of times?
is it considered public comment, you mean? Or is it like unlimited, like public comment, or potentially is? Is that what you're saying?
Well,
Yeah.
I mean, yes, can we say, it's your opportunity to ask questions?
Yeah, no, we can say
This is
that.
just the-
At least we have in the past.
And we're not taking more questions?
Right, yes, that's true, yeah.
But I just want to make sure I understand. And was that 3, did you say that in the past it had been 3 times? Is that 3 back in?
2.
2.
Two. We allowed people one question, and then and then we allowed a follow-up. But that, this was during, we can, that I think is something we can stipulate,
Okay, yeah.
that part.
Yeah.
It's just the comment, Once we've had a comment period,
Isn't it all the same? Isn't it all one period, though? Like, some people are going to ask questions, some people are going to make a comment.
no, yeah, well, we would, yeah, we distinguish that, but, so I need that answer. So thank you I'm really glad we talked about it, because now I can actually run that scenario by.
Yeah.
Which she did have a very good.
Yeah, absolutely, yeah.
Right.
I just, I personally don't want to have a public comment at the end, and I
No, I don't want that.
Right, and I also don't want.
Now, why we'll be here till
I don't
1
want
o'clock in the morning.
department heads wait, like, part of it was to organize the department heads so that, they
Yeah.
got their presentations in.
Well, last time.
We did, and it's definitely going to be different.
They came up in front of the podium, said what they had to say,
Yeah, I mean, I've watched them, so I certainly, I certainly know how when it's different, being in the seat and anticipating how the discussion.
Yes.
So my other question is about the asterisk item, questions for other departments, having heads of departments available the second night to take potential questions relevant to the departmental budgets. Those would presumably happen at the end, and that would be questions that either counselors have or the public has, correct? Okay, so we're asking a number of department heads to sort of make themselves available for a long period of time, potentially that night. And
Absolutely, yeah, it would be a long period of time.
Okay.
Not all, just the ones that aren't presenting.
the smaller departments that are
Yeah.
presenting.
They get out of
And-
presenting, but they have to be on call. That was at the, Councilor Elkins' suggestion, which I appreciate, to just, to answer any questions. It might not come to play, depending on questions, but, yeah.
Okay.
Any other format questions? So I'll let you know what Solicitor Seawald says. Laura, where's Laura?
I got a call on
Hi.
asking why they're hoping that we're going to also
I'm
bring
here.
in the planning department.
Yeah, the planning department will definitely be here.
They're going to be scheduled?
They're all going to be part of the
Budget process.
the end department available. But, yeah.
Okay.
But, so Laura, so I sent Solicitor Seawald that question. We asked it last year, and I believe the answer was that with hearings, you don't. But but I don't know if you wanted to chime in about any of that. I guess we should just wait for Solicitor Seawald's answer.
Right. well,
Questions
it
we didn't
didn't-
count as part of public comment, exactly.
Yeah, just about being able to limit people to the topic they're asking questions about.
Yeah.
It doesn't seem like you could restrict them, like if they wanted to ask a question about the planning board, the planning department's
Yeah.
budget, or the mayor's office budget, from doing that at any point that they wanted to. I mean, it seems like you could definitely encourage people, like laying out, this is the format, we're going to have the departmental presentations and
Right.
if possible, but it doesn't seem like if someone shows up and wants to ask about something else, that you'd be able to not allow them to, but.
To be clear, I'm not suggesting we not allow, I'm suggesting that we, if we are going to do department discussion, I mean, and the alternative, we could do all the department presentations and then do it all in one big mushy mess, afterwards.
Or I guess not saying not allow, but tell them, well, you have to make that question or ask that question and make that comment at a particular time. I'm not sure you could do that when budget hearing is, like Rachel was saying, on the overall budget. So it seems like whatever question they wanted to ask, hear what you're saying, you definitely would want to encourage them to ask questions after the particular presentation. But,
I just don't know what the point is of doing department head, of doing this sort of back and forth, if you weren't gonna kind of try to focus it that way. Again, not to the exclusion of having some time for people to ask general questions, or even during that period of time to, I don't know. It seems to me like either all department heads go, and then we do one big mushy thing, or what's the point of going back and forth after each department? You know what I mean?
Well, generally, people have organized themselves to comment. I mean, we haven't actually had that issue, but I do name that this is.
I know, right, I'm
happening this year.
anticipating.
And that's why I actually was going to have the schools have their own night, but it just was getting too much when we added Kappa, and then it was going to be like 7 departments. And it was like at a third night, so I thought, that's why I wanted DHS to go first and not have to wait through, school comments till, whatever. But I mean, it's definitely imperfect. There's definitely that element that there's department heads going to have to, wait at certain points or.
Right. I guess it also just, if they go in order, once the department head has spoken and we've had this period and we've moved on, do they have to stick around, or because in which case,
No, they don't. No, they leave after their presentation, and and after we've gone through questions.
Okay.
So even if someone comments later, they don't have to be there. Yeah.
Just trying to anticipate how it's going to go.
I appreciate you running through this scenario.
But we need to make that clear to the public, that if they have a question about fire rescue,
Yeah.
it's up first.
Yeah.
They better ask it during that question period, right after the departmental presentation, because if they decide later, the fire chief will no longer be here to answer the question.
Yes, absolutely, yeah. That's right. Okay, so I will let you all know about the clarification I'm going to get, and I hope they'll all be, it's going to take, a village here to...
I think it's all going to work out fine.
Yeah, yeah.
And
Okay,
Laura's
so let
very
you-
helpful, too.
Absolutely. Okay, well, thank you for having that discussion with me. It's good to kind of picture it. I really wanted to run as smoothly as possible so that we,
Get organized.
yeah, and also just really utilize this time with the department heads. I mean, we'll have time, all of us, and the public even, to make comments and talk with each other. So I really want to focus on, this is a time to really utilize the department heads' time, presence.
Yeah, that's it.
So
That's
I will think about.
very much my concern.
Yeah, got it. All right, so I'll let you know. All right,
There's a lot out there.
yep. Anything else on that subject? It's referred to.
Oh, no.
Anything
Sorry,
else?
no.
Okay, and we don't have, let's see, no referred items, no new business. We good? Did you second?
Second.
Wow, you guys are all smooth. Okay. Okay.
I think we can.
All
Aye. Aye.
Yeah, all in favor?
Aye.
The ayes have it.
Weird.
All right, thank you.
Aye.
Thank you.